YouTube channel. This is your friend, real estate agent Mimose VALME. Thank you for crossing this page and welcome to this channel. If you are new on this page, please consider like and subscribe down on this channel. Also, like this page and share this video so you can help us to build our community. So this is your friend Mimose. So I'm a real estate agent. I work with Success Real Estate. I usually come in here, give you some videos that actually give you a little detail, information that you need if you're interested in the real estate industry, if you're interested in to buy a home or to sell a home, or just to know how the real estate industry is doing. So this is the channel for you. So in today's video, I will give you a little bit detailed information about mortgage, because usually when somebody go buy a home, they go to the closing table. So the attorney usually tell them, this is your monthly mortgage, this is your mortgage, this is what you pay every month. But usually they have no idea what include in that mortgage, because most people, believe it or not, they don't like to read, they don't like to look for information, they don't like to go do their research. They just sit and then say, you know what, hopefully somebody will tell me. Yes, I'm here to tell you what is included in a mortgage. So mortgage, it's what the bank, when you buy a home, it's what the bank sends you every month, is a statement that tell you how much is your mortgage payment. One of the reasons why I want to make this short video to tell you or give you explanation and tell you what is included in your mortgage. For the past few weeks, I've been getting a lot of call where people been calling me, say, you know what, they send me this bill, they send me this bill, they send me this bill. Am I going to pay this bill? My husband tell me to pay this bill, my co-signer tell me to pay this bill. Is this bill included in the mortgage? Am I paying them 2 times? So I usually give them the answer, and then they turn out to say that to be exactly what I tell them. So based on my experience for the last 5 years in the business, so I'm gonna tell you what is included in your mortgage. Let's get started. Mortgage is what include everything. So in the mortgage, you have the principal. The principal is the money that you borrow from the bank. Let's say, for example, you bought a home that costs you $300,000. The $300,000 is the principal, where you probably put like 5% down or 3.5% down. So you borrow from the bank the 96.5% and you put 3.5% down. So once you get the loan from the bank, come your principal. That's what you pay. So while you're paying this principal every month, the bank lend you the money, not for free, which is they charge you interest. It's depend of your interest. Some people interest is 0, some people interest is 2 something, some people interest is 3 something, some people interest is 4 something. But you and I know you bought a home for like 30 years where you're going to try to raise your children or raise yourself or raise your kid, raise your cat, raise your little dog. So it's called your home. So once you have the mortgage, you have the principal. So the bank lend you the principal, they're gonna charge you interest. So on that mortgage, you find interest. You have principal, you have interest. And the next thing that you find in the mortgage, you have the taxes. Taxes, that's what usually said, they say homeowner tax. The tax is what help the city going. The taxes is what's pay, for everything that you see doing out there. Your school in your neighborhood, the police office in your neighborhood, the firefighter in your neighborhood. So those are the money that's paid those people. So the taxes, that's why usually you might pay off your home off, but the tax is coming every year. You never will be able to pay the tax off, because that's where the city, that's little money, that's part of the city. So you might get a home, you pay it off. Some people pay the home off, 5 years, 7 years, 10 years, 20 years, 27 years. It depends on the budget. Yes, some people pay their home off, but every year they pay their taxes. So in the mortgage, you find tax. You have no choice, you have to pay that tax. If you don't pay that tax, the city can foreclose, can put a lien on your home. That means you owe that tax. That's why for the bank to make it easy for you, they put the tax in the mortgage. Inside the mortgage again, you find mortgage insurance. The mortgage insurance, which is the PMI, private mortgage insurance. So this insurance is protect the bank in case you default in the loan, because the bank know life is going to happen. Some people buy a home with their husband, their wife, they get divorced, so everyone want to go their own way, so nobody want to stuck with the home, so they decide to sell it and to buy each of them their own home. So that's change. So basically some people might say, you know what, I'm not gonna pay that loan again, let me just leave the house, abandon the house. So that's why they have you pay the private insurance, the private insurance, the which is they call it the PMI, private insurance. So mortgage that's protect the bank. That $300,000, that $400,000 that they pay for you at closing, and the seller give you the key to the home. So the attorney share the money to the seller after the deed been recorded. So that money you borrow, they have insurance to protect that money, that bank that protect the money. It's same, let's say I have $10,000. I lend you $10,000. I need to know how you're going to pay me back my $10,000. I might tell you, if you don't pay me back my $10,000, I'm going to come home to get your bicycle. I'm going to come home to get your shoes. I'm going to come home to get something from you. So this is what's going to protect my $10,000, for example. So the next thing that's included in the mortgage is home insurance. Home insurance is what protect the home. For example, let's say fire catch to the house, you call home insurance. That's what you pay them. So they're going to come to help you out, to actually put you in a hotel and build you another home. Let's say, for example, if tree fell down off your home, that's going to protect your home. So that's home insurance to protect the home. The same way you have insurance in your car, you have insurance. Some of us, we have a life insurance for when we go B2 with heaven. So the home, you need to protect it. That's what they have, the home insurance. So the other thing that sometimes you pay too, we have the flood insurance. So it's based on the area. Let's say if your house is on the flood zone, so they say sometimes the area might be flooded. So you have flood insurance if that happens. So when you call that flood insurance company, they will be able to come to cover everything, to help you to get to a hotel, to give you whatever you lost during that flood. So I'm gonna do a recap. So you have the loan, which is the mortgage payment, which is every month that you pay. The mortgage payment includes your principal, the interest, the taxes, your mortgage insurance, which is the PMI, your home insurance that's cover the house, and sometimes you have flood insurance if the home is in the flood zone. So the reason why they put all of them together, they know that sometimes life happens. Sometimes you forget to pay your bill. So once you send the bank your $2,000, your $1,700, your $1,200, or $800 for your monthly payment, someone in the bank take that money and then send it wherever it needs to go. Send the portion that for the tax, the portion that for the insurance, the portion that's for the interest. So your home is paid. So this is what include in the mortgage, the monthly mortgage. When you said mortgage, so all those things they included in the mortgage. So you don't need to worry about taxes like most of my customers sometimes they do worry because they don't know. I have to tell them that that payment has been paid a few days before the bill is due, even though the city is gonna send it to you. A few days when the bill is due, the bank is gonna pay, so you don't need to worry about it. So the money that you pay for the taxes usually goes to an escrow account, which is a 7 for the tax, where they put that money. Usually sometime every year that tax probably goes up by $10, by $5, by less or more too. It's depend of the area where the home is located. This is what I share with you. That's include your mortgage. For those of you that has question, hopefully this video answer your question. If you find any value in this video, like this video, share it with your friend, and subscribe if you already done so. I will see you on the next video. Bye bye.